What if I told you you had two choices between two companies? Both of the companies the same market cap, about 500 million. One company revenues 500 million. The other company revenues about 100 million. This company, the company is buying back shares. Insiders are buying shares. This company, there's no buybacks and no insider buys, actually a little bit of insider sales. Which one would you choose? In today's video, that's exactly what we're gonna cover. If you are new to this channel, my name is Mariusz Skonieczny. I run Microcap Explosions, a website dedicated for microcap stocks, which are hated and ignored by the investment community. I also wrote about 10 books on investing, one of which is available for a free download at microcapexplosions.com, so please make sure you get yourself a copy. I have been watching these two companies, Voxtur and Real Matters, for quite some time, for about 2 years. And I am personally involved in Voxtur. And if you're new to this channel and if you are interested, I made videos on Voxtur and they are located in Voxtur playlist on my YouTube channel. But Voxtur and Real Matters operate in the same market. Some people call them competitors. They're not really competitors, but they're related. And Voxtur's chart looks like this. As you can see, it's almost a 10-bagger. And Real Matters chart looks like this. As you can see, it's in a complete free fall. And Real Matters is the company that had revenues of 500 million in the fiscal year 2021. And Voxtur is the company that will have revenues for 2021 around 100 million. They have the same market cap. Actually, Voxtur now surpassed Real Matters market cap. And it's interesting because the insiders of Real Matters are buying shares. The company is doing a buyback because they think that the company is undervalued. They spend millions of shares. They were buying at $14, they're buying at $7, and now the stock is in a continuous free fall. And to be honest, I think that the insiders and investors are in complete denial about what is happening with the company. When I first looked at Voxtur, the market cap was, I think, less than 50 million. So let's just say it below 100 million. Microcap stock, nobody knew it existed. At that time, Real Matters had a market cap of $2 billion. I mean, the gap was huge. So for me, I was thinking, wow, I think that Voxtur is going to reach a market cap of Real Matters within a reasonable period of time, and we will make a lot of money. At that time, I didn't really think about that those two companies were going to have the same market cap a lot, mostly because Real Matters is in a free fall. And I think that Real Matters business is in trouble. So let's talk about some basics, okay? In order for you to understand what I'm about to say, you have to understand how the real estate, and more specifically, the real estate appraisal business operates. Okay, so let's say you buy a house in the US or Canada. You put in the offer on a house and then you take out a loan, you take out a mortgage. In order for the bank to give you the mortgage, there has to be an appraisal done because they want to know what the house is worth, because house is used as a collateral. If you don't pay, they take the house back. They want to know what the house is worth. And an appraiser has to be hired to do that. I used to be a real estate appraiser from 2003 to about 2008, somewhere around there. I was a real estate appraiser both on the residential side, on the commercial side, and I was also a real estate broker. So that was before the 2008 and 2009 financial crisis. And when the financial crisis happened, it was blamed on the housing market. And it was also blamed that, the appraisers were appraising the houses too high. The brokers were in communications with the appraisers, because at that time, mortgage brokers were the ones ordering the appraisals directly from the appraisers. And appraisers are independent parties. They're usually firms with, maybe one person or 3 people or maybe a team of 10. They're independent entities outside of the lending. And so what we had at that time, the brokers were ordering the appraisals. And the brokers were really telling us, and I said brokers, mortgage brokers, they were pretty much telling us what to appraise their house for. So it was kind of like a joke, because they were like, you hit this number, because they needed this number for the transaction to come through and for them to get paid their commission. Well, when the financial crisis happened, that system was changed. So the brokers were no longer allowed to communicate with the appraisers. And that's when AMCs were born, appraisal management companies. And that's what Real Matters is. Real Matters is an appraisal management company. So what AMCs were, they were the entity in between the mortgage brokers or the lenders and then the appraisers. So the lenders or mortgage brokers would order the appraisals, and then the AMCs would find them the appraisers, the appropriate appraisers. So Real Matters as an AMC is a scheduling company. They schedule an appraisal. And so because Real Matters was founded in 2004, it went IPO in 2017, Real Matters rode that wave of AMCs being formed, AMCs being needed. So Real Matters did real well. And over the last 5 years that I see, the revenues have been growing tremendously. In fiscal year 2016, revenues were 248 million. By 2021, they were 500 million, which looks like a fantastic growth. Yet the stock is in a free fall. And so what is going on? You see, what is going on in the appraisal space is a complete shift. As Real Matters rode the wave of AMCs being in need, now everything is changing because AMCs are about to go obsolete. UWM, who is the biggest or the second biggest wholesale lender in the country, recently introduced what is called Appraisal Direct. In other words, Appraisal Direct, they are circumventing AMCs and they are going directly to the appraisers. So they have their own scheduling platform, which by the way is powered by ANOW, which is owned by Voxtur. When they introduced that platform, they told the brokers, mortgage brokers, because they cater mostly to mortgage brokers, they told them, we are introducing Appraisal Direct. And you as a mortgage broker, you can still use AMCs or you can go direct. And at first, of course, only a small portion of the volume was going through Appraisal Direct because people were used to using AMCs. But here's a little piece from UWM how they are talking about Appraisal Direct.
Dustin Singleton is here, and we are talking about Appraisal Direct. Dustin, good morning.
Good morning.
So what should our clients out there know about Appraisal Direct?
Yes, so Appraisal Direct is an amazing program, an amazing team that we rolled out several months ago. That's been, again, a huge success. So no longer does any bank or any retail arm have an advantage over our brokers, not having to order an appraisal through a third party or through an AMC. So again, it's been a huge success. 70% of the appraisals done through UWM are actually done through Appraisal Direct. So to put that into perspective, that's tens of thousands of appraisals per month. And we only see that number growing in the future.
Okay, Dustin, how are successful clients leveraging Appraisal Direct to help grow their business right now?
Yes, so one of the most recent updates that we've had to Appraisal Direct is now our brokers have the transparency of seeing when they order an appraisal if there's 70 appraisers in that area or if there's 70. So they do have the ability to still order through an AMC if their preferences are set correctly. But to answer your questions, our best brokers are taking it a step further. If they notice an area is underserved, reaching out to their favorite appraiser or reaching out to their realtor's favorite appraiser, making sure they have the appraisal sign up link, getting them signed up. So in the future, making sure that area isn't under service. So brokers, if you don't have the link, reach out to your AE, make sure you have it, and let's continue to grow this team, grow this program for the years to come.
As you can hear in this clip, Appraisal Direct is a huge success. And now, as of the date of this video, 70% of the appraisal flow is going through Appraisal Direct. And you might ask, why is that? You see, in the real estate space, mortgage is a commodity. You and I, we don't care about who gives us the mortgage. We care about interest rates, whoever is the cheapest, but all of the banks, all of the lenders pretty much have the same access to capital. So they can't differentiate themselves too much on the interest rates. But what they can differentiate themselves is on, for example, on brand name. Bank of America, JP Morgan. If you have a bank account with these banks, you are, more likely to get a mortgage from them. Now, you can also get a mortgage from non-branded companies like UWM. UWM, which doesn't have that brand, they will try to differentiate themselves on technology and the speed of closing or the cost of the closing. So if you see two options, you have, mortgage for this rate, mortgage for the same rate, closing time 50 days, closing time 10 days. You're gonna go with the shorter closing times. And so UWM chose to go Appraisal Direct because they want to speed up the closing times. They want to increase their competitiveness on that front. By going with AMCs, that was not very efficient and that was not the best way to go. So they chose to go direct. And that is happening everywhere. When I was talking with the founder of ANO, which is the platform that allows the lenders or mortgage brokers to go direct, he said that they are getting so many inquiries that they don't have enough days during the day to accommodate the interest. More and more parties in the mortgage space are going direct, which means the AMCs are getting pushed out. And Real Matters is an AMC, which grew fantastically over the years. And now they are about to hit the ceiling. Because think about this. When people look at revenues, when they look at the financials, they see revenues. But what they forget is what drove those revenues. Revenues are a result of a company solving someone else's problem. And Real Matters was solving the AMC problem for the top 100 lenders. And Real Matters doesn't have the capability of solving the problem that they now need. They need faster closings, and to get faster closings, you need the appraisers to do the work for you fast, right? And if you go to some of the appraising forums and you read about shortages of appraisers, because that's where the biggest problem is with the real estate transaction right now, is that appraisal is the bottleneck. They take forever. We don't have enough appraisers. The average age of an appraiser is 62 years old. They hold up the entire real estate transaction. And if you read some of the comments from the appraisers, they will tell you there is no shortage of appraisers, but there is a shortage of appraisers wanting to work for AMCs. And now, I don't necessarily agree with the fact that they think there's no shortage of appraisers. There is. What I do agree with is that there is even a bigger shortage of appraisers wanting to work for AMCs. Think about yourself as an appraiser. You're sitting in front of a computer and you're getting orders or you're bidding on orders. And you get one directly from the lender or you get one directly from AMC. One you get paid $500, one you get paid $200. Which one are you going to go and do? Of course, you're going to choose the one that pays you more. And the reason why you get paid less with AMCs is because there's a middleman. AMC, which really is not needed. It was created as a result of the financial crisis, and the whole situation could have been solved differently, but politicians always choose solution that's popular but it might not necessarily work. So they chose AMCs. And now the trend is that appraisers don't want to work for AMCs. Lenders are going appraisal direct. What do you think is going to happen to a company like Real Matters? Do you think it's going to have an easier time to grow now than before? And also, interest rates are going up. The Fed is raising interest rates. So the good times for a company like Real Matters, in my opinion, are over. And the growth opportunities are much harder to combine now than they were over the last 12 years or so. In the Real Matters financial statements, the company said that the purest measure for success is the increase in the market share. And they were very successful at it. They were able to grow the US appraisal market share from 9% in fiscal year 2018 to 11.7% in fiscal year 2020. And then they showed this wonderful graph in one of their financials. Now, the first cracks started to show up when the following year, they didn't show the graph anymore. Instead, they showed this graph dividing the market share into US appraisal purchase share and US appraisal refinance market share. So in the prior year, they had it combined. Now they broke it down. Now, why did they break it down? I think they broke it down because their market share declined and they didn't want to show this. But that's exactly what is starting to happen. And I believe that it's going to accelerate even more. And then the management and the investors, more the management, I think the management is more in denial about what is happening to Real Matters and what is about to happen even in the future than investors. Investors are realizing this probably earlier and the stock is in a free fall. But I'm not really sure if investors are realizing that this is what's happening or investors are dumping it because they're realizing that Fed is raising interest rates and that the good times are over. And the most recent quarter, fiscal year Q1, revenues barely grew. And then the net income got absolutely crushed. So the stock is selling off. Investors are panicking, but I don't think investors realize how dire, in my opinion, the situation with Real Matters is. And the management looks like is in complete denial because they're buying back shares and then they're buying shares themselves for their personal accounts. Voxtur, on the other hand, is in a completely different situation. And I remember when I first released my Voxtur videos, there was this hedge fund that was doing the research, and analysts from the hedge fund actually called Real Matters to ask about Voxtur. And apparently he was told that Real Matters doesn't think that Voxtur is a real competitor to Real Matters. And I just kind of shook my head and realized how arrogant and clueless Real Matters is, because Voxtur is not only the solution to what the lenders are looking for, Voxtur is single-handedly crashing Real Matters. On the appraisal side, Voxtur has more than one business. Voxtur has a foreclosure business, Voxtur has the title business, Voxtur has real wealth business, but it also has the appraisal business. But Voxtur is truly a technology company. You see, Real Matters calls itself a technology company, but it only has margins in the order of 30%. I mean, seriously, only in Canada you can call technology companies with those kinds of margins. It's absolutely ridiculous to even call it a technology company. It's more like a servicing company. It's more like a scheduling company. That's all it is. Voxtur is truly a technology company because Voxtur has a platform called ANow, which is the exact solution to what lenders are looking for. That's why UWM signed up and created Appraisal Direct, which is ANow. They just didn't come out and say it in the press release because they want to keep it quiet and they don't want their competitors to realize that ANow is powering Appraisal Direct. When you go to the press release from UWM talking about Appraisal Direct and you click on the link, it takes you to ANow. That's how I know that Voxtur is behind this. But now Voxtur is the solution to the industry's problem, which is appraisers take too long, AMCs slow everything down, and appraisers don't want to work for AMCs. When UWM released Appraisal Direct, the appraisers flocked on the platform because they want to work directly with the lender. That's where they want to get their business. So if you're the lender and you have to have these loans closed and you have to have them appraised, are you going to go with the platform that appraisers are happy to work on, or are you going to go with the platform that appraisers hate working on? The answer to this question is completely obvious. And that's why the brokers are now sending more and more appraisal flow through Appraisal Direct on UWM versus going through AMCs. And over time, AMCs are going to go down to zero within the UWM platform. And now UWM is now not only offering cheaper appraisals, I just saw that they're even offering free appraisals, which means what they're trying to do is they are going after market share. They're trying to steal market share from the Bank of Americas, from the JP Morgans, from the Rocket Mortgage, and they are being successful at it. Their market share is growing. So now you have to question yourself. If you Rocket Mortgage, if you JP Morgan, if you Bank of America, if you Wells Fargo, are you going to just sit there and continue going through AMCs? Or are you going to think about, hey, UWM is going Appraisal Direct and they are hugely successful at it. How about we also go Appraisal Direct, our own Appraisal Direct? But who is going to solve their Appraisal Direct problem? Voxtur. Because Voxtur is the best platform and Voxtur is the platform, is the solution for their pain. So all of these players are going to go Appraisal Direct. All of these players are going to kick aside AMCs, and companies like Real Matters, people think they're undervalued. They might go to zero. I mean, maybe I'm exaggerating here, but if you think their stock is undervalued, you haven't seen anything yet. It hasn't even started yet. So this dynamic is why I believe that Voxtur, even though it has a lower revenues right now, is going to do much better than Real Matters, even though the past financials show that Real Matters has revenues of 500 million. I believe that's going to continue going down. And you know how it is. Stock market investors don't like negative growth. Stock market investors are drunk on hyper growth. And Voxtur is in the hyper growth mode simply because it has the solution to the industry's pain. And in Q2 of this year, Voxtur is going on NASDAQ from TSX Venture, which, very little exposure. It's going to go on NASDAQ. It's also probably going to trade on Toronto Stock Exchange, the main board. People are going to wake up to the fact the financials are going to reflect the growth, which is as a result of Voxtur being solution to the industry's pain. Companies like Real Matters are going to have a very, very hard time growing. That's it for this video. I hope you enjoyed this content. If you feel like I did a good job, subscribe to this channel, like the video, click on the notification bell. In the comment section below, let me know what you think. Am I crazy? All the opinions are welcome. Thanks for watching.